Hi, I'm Stock Investor Davis. Welcome to the channel. We're going to take a deeper look into United Health Group today, focusing on its earnings per share and price to sales ratio, both currently and based on the guidance management has provided, which in this case will bring us to December 31st, 2023 and 2024. Then we'll close by applying our findings to its current technical chart. Before we get started, please smash that like button and subscribe. There are chapters below if you want to skip ahead to a certain section, and if you have any questions or notes, let me know in the comments below. To begin, I have at the top United Healthcare's current earnings per share for the trailing 12 months, totaling $23.03 per share. The quarterly earnings making up that figure are in the top right. Once this was calculated, I pulled the company's past earnings and PE ratio results, finding a few items which we'll use going forward. First, we're going to focus primarily on the past 3 years, as I feel this accurately depicts the company and its current state. I'm using that data to make the assumptions and estimates going forward. With that in mind, I then established a reasonable range in terms of its PE ratio during that time span. In this case, a reasonable PE ratio range is between 20 and 25. Also noting that the average PE ratio is around 23. With our range established, we can then multiply those figures to its current earnings per share of that $23.03, giving us a fair price range of between $461 and $576. Based on the price today, it appears to be trading at an average price, $520. Moving to the company's current price to sales ratio, we have a similar setup to the previous slide, with its current trailing 12-month sales at the top, totaling about $360 billion, and the quarterly sales on the top right. We then pulled the company's current shares outstanding, which is 926 million shares as of its last earnings report. We divide those two figures to arrive at a sales to shares figure of $388.75. We'll come back to this figure shortly. Similar to the previous slide, I pulled the company's past sales and price to sales ratio results, finding a reasonable range of between 1.2 and 1.6 times sales over the past 3 years, with an average of about 1.4 times sales. Based on our current reasonable range and the current sales per share, we're able to calculate that a reasonable share price is going to be between $466 and $622. With the current price around $520, it's a fair price, slightly favoring the buyer side. Let's now look at the forward guidance. Looking at management's guidance, they have provided the following projection for its fiscal year end, December 31st, 2023. Final earnings per share to be between $24.85 and $25. To keep it simple, I'm going to split that range in half, and we're going to use $24.92 going forward. Using this information, we can estimate a reasonable forecast of what to expect in terms of a fair PE ratio and stock price. This, of course, requires some assumptions on our part, but with the goal of keeping things simple until more information is provided, we're going to rely on what management has provided. Taking this new earnings per share figure and multiplying it by our reasonable PE ratio range of between 20 and 25, we arrive at a fair value range between $498 and $623, which makes the current price of $520 look a little better for the buyer, but not below our fair value range we established. Pivoting to the price to sales ratio based on management's guidance, we can see the top shaded portion is the same as the previous slide, so I'm going to focus on the bottom half. With management's guidance, we can calculate a future projection for sales per share of $399.09. Then multiplying this forward guidance to our reasonable price to sales range of 1.2 to 1.6 times sales, resulting in a fair value stock price between $4.79 and $6.39. The result being that the current price of $5.20 is within our calculated fair range and favoring the buyer side more than before. Looking even further out at management's 2024 guidance, they have provided the following projections for its fiscal year end December 31st, 2024, first being its revenue of $400 billion, and second, its earnings per share between $27.50 and $28. Similar to before, just to keep it simple, I'm going to split that range in half and use $27.75 going forward. Using this information, we can estimate a reasonable forecast of what to expect in terms of a fair PE ratio and stock price. This, of course, requires some assumptions on our part, especially given the amount of time that will pass between now and then. For our purposes now, we're going to keep the shares outstanding figure the same, and we'll update that as we go. Otherwise, we're going to rely on what management provides. Taking this new earnings per share figure, that $27.75, and multiplying it by our reasonable PE ratio range of between 20 and 25, we arrive at a fair value range between $5.55 and $6.94, which makes the current price of $5.20 look like a great deal, well below our established fair value range. Pivoting to the 2024 price to sales ratio, based on management's guidance, we can see the top shaded portion is the same as the previous slide. So I'm again going to focus on the bottom half. With management's guidance, we can calculate a future projection for sales per share of $431.97. Then multiplying this forward guidance to our reasonable price to sales range of 1.2 to 1.6 times sales, resulting in a fair value stock price between $5.18 and $6.91. The result being that the current price of $5.20 is within our calculated fair range and near the bottom, heavily favoring the buyer side. As a summary for our earnings per share calculations, at the top we have where it currently stands today, and on the bottom we have our forecast based on management's guidance for year-end 2023. Then, as a summary for our price to sales calculation, at the top we see where it currently stands today, and on the bottom we have our forecast based on management's guidance for year-end 2023. Finally, to wrap up by looking at the technical chart, I've added some boxes to highlight areas where, to me, it makes sense to either add to the position in green or take profits in red. Otherwise, we have noted that the stock is seemingly between two patterns. First, it's been trading sideways between $4.54 and $5.41 since December 2021, with some support noted around $5.02. Or second, we find an uptrend forming since July 2023, and it's currently at the bottom of that uptrend. Right now, both patterns are within our marked fair value range. It's slightly favoring the buy side, but almost right in the middle of our fair value range. Again, looking ahead, once earnings are announced and assuming the results are in line with what management has stated, it's more clearly on the buy side of the fair value range. For now, though, the price is okay. Thank you for watching. Please like and subscribe.